Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Tuesday the 28th of May 2013. Well, we had a very quiet session yesterday, largely because the UK and the US were out on holiday. Since volume and volatility have come back into the market, what we've seen is the dollar bears have run out of steam. So we've seen a broad-based dollar pullback, we've seen the yen come under pressure, and we've seen a more of a risk-on tone to the market. So the safe havens like the yen and the Swiss franc, they've come under pressure, but stock markets across Europe, they're up by quite a lot. Now that opens up quite an interesting question. Was the pullback that we saw last week, was that temporary? Will we continue to see further gains? Or could we see further deeper pullbacks later on in the coming weeks as we hear more from both the economic fundamentals and also from the Federal Reserve in particular, but also other central banks? We'll have to wait and see how the market rally that we're seeing, even though we have seen gains capped a little bit. Now let's take a look at dollar yen. That had a nice rebound. As you can see, there are two things driving dollar yen. This chart shows you dollar yen and the Nikkei, which is the Japanese stock market. The Nikkei is the orange line in that chart. As you can see, the Nikkei, the two of them moved together pretty much. As the Nikkei came off last week, so too did dollar yen. But what we've seen is that the Nikkei has managed to stabilize and get back above that 14,000 level, which has really helped dollar yen to get back above that 102 handle. Now remember, it had been as low as 150 last week. It even got below there at one point. But what we've seen is a nice climb back, but we are seeing gains capped at 102.30 to 50. And we think that's really going to be what's going to happen. Now we do have some key economic data coming from the US later on today. We've got house price data. We've also got consumer confidence data, but it's really going to be next week that the market will focus on as we get close to that non-farm payroll. So while we still think that 100 is going to act as very, very nice support there in dollar yen, we do think that gains are capped. And right now we think we're trading in a range between about 150 on the downside and then 103.30 to 70 on the upside. Now the Aussie dollar has also been a nice mover. Now there's a few interesting things about Aussie dollar. Let's take a look here. This is the daily chart. And well, we did dip slightly below 96 earlier, but we managed to hold support at 95.80. Now that is a massive level that everyone is looking at in the Aussie, because that is a low from June 2012. Now the fact that we haven't got down there, and also the fact that we're looking very, very oversold, as you can see on the RSI chart, or the RSI part of that chart in front of you. As you can see, we are looking extremely oversold. So the fact that we didn't break below those 12-month lows does suggest that we might be just in for a bit of a recovery period. Right now, 97 has acted as very good resistance. We think in the longer term, maybe just be a little bit patient. If we do get above 97, then 97.30 to 50 could act as a good selling zone. So even though we think that we are likely to continue to move lower, the fact that we didn't break below those June 2012 lows does suggest that that's a short-term bottom in place for now, but we do think it's a sell on early rallies, especially towards those 97.30 to 50 highs. Okay everyone, good luck trading today, and please do join us later for more. Thank you.